You thinking about relocating to London, or perhaps you're already here? Well, beyond property, you definitely need to be thinking about your overall finance picture. So I'm excited to have this YouTube video where we're going to be talking to a great wealth advisor to give you the information that you're going to need to know. Stay tuned. All right. Hi, everyone. Thanks for joining me on another episode on my YouTube channel. Today, it's really great to be dedicated to talking beyond real estate. Obviously, when I help clients, especially Americans, relocating to London, we're focused on the property side of things. But moving to a foreign country obviously has so much more impact, and there's so many other pieces you want to make sure you put in place. And in my networking, connecting with people, I want to make sure I'm the right partner who can introduce you to other great referral partners who are specialists in their areas. So I'm really excited to have Gorge King on with Maseko Finance, which is, I think, a wealth advisory firm really specializing in helping American expats. So I just thought you were the perfect person to have this chat with. So welcome, Gorge, and really appreciate your time.
Very happy to be here and looking forward to trying to share some little bits of knowledge and wisdom for people, help them avoid pitfalls and do the right thing.
Yeah, I actually think I've fallen into one of your pitfalls. So let's dive in. If you would, tell us a little bit about you, your journey, and the Maseko specialty and what you offer.
I will not bore you with the really long story, but obviously from the accent, I'm an American expat also. Been here since 2007. So I'm never sure if that means I've been here a long time or a short time, depending on someone's perspective. And so have lived these issues and have been helping to advise people on these issues for a really long time, sort of seen the whole thing came, with a big expat package. They dealt with like tax equalizations and finding schools and finding a home and so forth. And that seemed like a lot, but then I didn't know all the stuff that I didn't know until later. And that's just true for so many people. And, came on a multi-year contract and then, 15 plus years, whatever, I'm still here. And that sort of happens all the time for people as well. And so Maseko sort of was born out of this need for American expats to get sort of special advice that they're just not generally getting. So the firm was founded in 2008, long before I got there, been there about 6-7 years, just for the purpose of looking after Americans, because there are tons of firms that say they do, and they sort of know a few things. They say, well, we won't do this, we won't do that, but the experience is not comprehensive. So with this being the sole focus, hopefully people are getting, a real hands-on, dedicated service. And as you and I were talking about, like what you're doing right now, a lot of what we do is not our core conversation. So what we usually are talking about investments that inevitably leads to some type of tax. And then that leads to just broad financial, insurance or trusts or all sorts of stuff we don't do on a daily basis. We end up having some kind of a chat with because it interfaces with their financial life and questions and so forth. So it's really fun and very varied, having all these conversations with American expats.
Great. Okay. So, Gorge, from my perspective, when people are moving over here, obviously the first thing they're thinking about is the housing situation. But beyond that, they need to be thinking about broader, settling into London in this case. From a timing perspective, somebody already has like a wealth advisor in America, is moving over here for, say, work, a whole different compensation scheme. Why would they be approaching you? What kind of conversations should they be having, or the things they should be thinking about? And when should they be having those conversations?
Yeah, that's probably the perfect question, especially for clients and the people you're going to come across. And unfortunately, the best time to be having conversations is before they leave the US. It's before they actually get to the UK at all. And of course, that happens very rarely. Now, that could happen quite well because someone's perhaps engaging with you before they get here. They're going through that process. You actually might be one of the really few positive agents for that to actually happen, for someone to have a conversation as early as they should. And the main reason for that is the conversation they need to have with us or someone at some point is about two things. It's not just about the UK life they're going to build and what they're going to do once they're here and invest in and so forth. It's also the US life they're leaving behind and the assets they have there and how they're structured and the unintended consequences of those perfectly normal structurings from a US perspective that are very disadvantageous from a UK perspective. And once you step foot in the UK, that clock starts. And so, you're here a month, a year, or 2 years, and then you find out in a conversation with me or someone, oh, I should have done that. You can still fix it, but now it's more costly. You've missed a couple of years of growth that could have been growing tax efficiently versus now having penalties or whatever and so forth. So as a rule of thumb, the earlier, the better. And in terms of the topic, there's two separate topics. One's about your new UK life. One's about what you've left behind in the US.
Okay, fair enough. And again, what you're able to do as an advisor is really kind of look comprehensively at their situation and making sure then you can advise or give perspective on the potential impacts of certain strategies. Fair enough?
Yeah, that's right. And to be fair, there's two parts to that. I mean, yes, Maseko is registered to give advice in both the US and the UK. We're regulated by the US and the UK, so we can talk to people and do that on both sides. But as you were sort of alluding to there, often people have a US advisor for some of the US accounts, and that's fine. We can talk to them and coordinate with them, try and help teach them the things that they need to know to continue to look after their existing client for the existing US assets well from a UK perspective, and maybe just look to try and help them in the UK with the stuff that the US person can't do here. So ideally, it's a very joined up conversation with all of the wealth advisors, whether it's real estate, whether it's insurance, whether it's US or UK investment. The idea is to get that as joined up as possible.
Okay, fair enough. And then in terms of, I saw one of your previous conversations, talk us through, some of the pitfalls or maybe some assumptions that people make, perhaps in terms of investments, and why talking to your British friend in terms of what they're doing is definitely not going to be applicable or even advantageous to you as somebody who is an American now living in the UK.
Yeah, that is one of the most dangerous things that happen is you've got a friend, you've got a coworker, you've got a parent at the school gate, you've got someone that is very well-meaning, has done something where maybe they got advice and it was completely appropriate for them. And there's this assumption that, oh, then it's good for you. And it's not. And some of the most frequent pitfalls are things like ISAs, individual savings accounts in the UK. And ISAs for a completely British person with no US connections are absolutely a great idea for tax advantage savings and investment growth and so forth. And from a US person's perspective, not so much. The US looks at that as if it's just a normal taxable account. And so you get people making mistakes in terms of what they invest in there and how they invest, following advice that wasn't tailored to them, given their US UK oddities.
I can honestly say that's exactly what happened to me. I was put into an ISA by a reputable wealth advisor, just as kind of that was the standard, recommendation for, I guess, earning tax-free income off of your investment. And we ended up having to unwind that for exactly the reasons you mentioned.
I mean, I love giving free advice. I think information should be free. That's the information piece should be free. There's a service that goes with the advice. That's different. You pay for a service, that's fine. But just knowing stuff, why should that cost anything? So knowledge is what we should be sharing. And if I can share with anybody and everybody some really, really sort of basic characteristics, if you're an American investing in anything that isn't sitting in the US, and if that thing is in some kind of a structure, some kind of a wrapper, I don't care what it's called. It could be a CCAV or a unit trust or a offshore bond. I don't care what they call it. If it's some kind of an investment structure that itself holds investments, that's probably almost certainly tax toxic from a US tax perspective. And the problem with ISAs is people they'll own some kind of a fund in the ISA. If they just owned a UK stock in the ISA, they actually will end up being fine. But most of the time, that's not what they're doing. investing in some kind of a fund or structure, whatever, and that's when it becomes a problem.
Okay. Okay. So what we're hearing from this bit of it is definitely they're going to be perfectly, fine investment opportunities for somebody who has a different nationality or profile. So it's really important to factor that in. And I guess it's just how the different countries will look at, something that's taxable or not taxable, or tax-free and not tax-free.
Yeah, I mean, there is some good news in that, there is a tax treaty between the U.S. and the U.K. So there is some joined upness in how many of these things are looked at. And it's actually fairly infrequent that you end up paying tax twice. Usually you pay tax in one place and you get a credit in the other place and so forth. So most of the time, unless, there's a couple of landmine areas, but most of the time, it's an issue of hassle or maybe paying slightly higher tax in one place than another and so forth. And so what we try to really focus on is the areas where that isn't true, the areas where there's like a misalignment. In your area of the world in real estate, mortgages and mortgage financing, paying off mortgages is an area where there's misalignment. And, an American suddenly can find that they owe tax back in the US for paying off their UK mortgage. And that's, completely unexpected. The treaty doesn't align that. So it's trying to highlight those kind of things that really helps people, hopefully.
Wow, that's amazing. Oftentimes, as an American, they might be coming over on a temporary basis. Talk to me about that, what you experience, how you can perhaps still help or advise people in terms of that information and the things that they should know, even if they'd say, oh, I'm only coming over. Yet, meanwhile, I'm sure you and I know so many people who thought they were coming for 2 years and now are here for 10 and 15 and 20 years. So, but if somebody really, is on a temporary basis, what would you be advising them, or what kind of conversations should they be having?
Yeah, I guess there's temporary and temporary. So if you definitely are not going to retire here, so it's just longer than you thought, you're here for 10 years instead of 2, that does provide some relief, because the things you might have done wrong in terms of not restructuring your US assets, if you eventually have to sell them to fund your life in the UK, you're really going to get dinged for that. If instead you simply say, look, I messed that up, I'm just not going to ever touch those assets until I leave the UK again and go on to Singapore or back to the US or so forth. If that will happen eventually, even if it's 10 years later than you thought, then there's a little bit less damage, or at least a few more options to deal with what would otherwise be damaging. But if you really have come across to be a student and then you end up getting married and having kids and then really living here forever, that's quite different. And in that situation, usually what we're saying is it's painful and costly to fix, but the sooner you fix it, the better. Because what you're trying to protect is all of the future growth for all the years later, at least that all being clean. So time is your enemy in terms of not fixing a problem. Burying your head in the sand and wishing it to go away is not a solution that works here. And the other thing we have to think about is, the UK is only one part of a global person's life. So often we can help people think about accessing these funds, not while they're sitting and living in the UK, but when they're on holiday in France or when they're back in the US visiting people or whatever. So that, there's a lot of strategy around not just trying to prevent the problem, but when you have a problem, which often happens because people don't know to pre-plan, how to best work your way out of it and not have an unnecessarily big hit because someone just says, oh, you got to fix this. It's like, whoa, wait a second. Let's think about thoughtful strategies of how to manage your way out of the situation.
Mm-hmm. And what about for that international investor, an American as an investor, right? So perhaps they're not relocating here. Does that have different implications, but they have bought a property that's now here in the UK? Would you get involved in those conversations as well?
So those conversations, first, yes, but those conversations aren't what we do as a core job, right? Investing in stocks and bonds and so forth in the market, sort of liquid markets. So we wouldn't help someone with that investment, but we'd be very happy to have that conversation because yes, there are certainly implications. So for example, in that situation, someone that has no UK ties whatsoever would generally not have to think about UK taxes. But as soon as they buy an asset that is sitting in the UK, it's now a UK situs asset, that brings them into the UK tax net in one way or another. If for nothing else than if they get hit by a bus, that asset is going to be subject to UK inheritance tax because it's sitting in the UK. And the UK inheritance tax kicks in at a very, very low amount, especially compared to the US. So suddenly there's an element of planning that they bought a multi-million property and most of that is going to be subject to UK inheritance tax. So there's definitely a conversation to have about wealth structuring, about wealth planning, even if they aren't really in the UK, but if they're investing in the UK.
Yeah, one of the points that came up for me through COVID was, the concept that a will is only covering where the asset is held, right? So if you have, a single will in America, it's not going to cover your UK asset, right? So you want to make sure you're protecting and getting that separately covered. So that's an example of something that people just might assume that it's getting picked up, but it's really not.
That's a really good example. So that's another example of something we don't do. We're not lawyers. We don't write wills, but we have to understand this stuff. And if you're doing wealth planning, you have to understand and be able to read the stuff and flag things and so forth. And, a lot of times we'll be pointing an American expat to other lawyers so that they can look over that and say, look, there are unintended consequences in what is otherwise a very well-structured will. But when you get into now a multi-jurisdictional, situation, someone else who understands that needs to look at this and say, oh, wait a second, this has this implication and so forth. And so you can end up having one will, but you have to adapt that will to the sometimes conflicting needs of the different jurisdictions.
Yeah. Okay. Good point. The other thing is certainly as a self-employed person, and I came over originally with an employment situation and now work for myself. Would you also be able to help people structure, again, if they're thinking about, as we all should be thinking about, some retirement scenarios and things like that? That would be, in one scenario, you were employed and now you're self-employed, and how that might shift.
Yeah, that is a topic that comes up all the time. In fact, probably with increasing frequency since just before and through the pandemic, more and more people seem to be sort of setting up their own and liking to have the independence and sort of taking advantage of remote working and saying, actually, I'll just do this myself. So that's coming up a lot, actually. And there's so much focus on the business, whatever the business is, and investing in it and having it grow. And there's so little focus on themselves and the financial implications of this. So you mentioned one, which is around pensions, setting up some kind of a pension structure, whether it's on a personal basis. So in the US, that's like an IRA. In the UK, it would be a SIP, a self-invested pension plan, SIPP. So you can either do it outside of the company structure, but make sure you're contributing money for your retirement there, or you can actually structure some type of retirement program within the corporate structure, depending on how you structured your personal business. But that often isn't a consideration, and it needs to be. But frankly, it's much more than that. Let's hope that what you're building as a business is going to be really successful. Well, the good news is, yay, you're going to generate wealth. The bad news is you haven't planned for the fact that you're going to generate wealth. And so the fact that you maybe just own it in your own name and have it structured how you've owned it or so forth just means that you are potentially going to lose an unnecessary amount of the wealth you've created in all this blood, sweat, and tears and passion and emotion of what you built, because there was no planning in the beginning about your retirement, your exit, how to own your wealth as it grows, et cetera. So yeah, those are really important conversations.
Okay. Well, I mean, this has been very helpful, and think in terms of giving people a summary. Is there anything else that you would want someone to know, particularly as an American moving over here? What we've heard is the sooner the better to be having these conversations. Also, don't assume that what works for someone else is going to be applicable to you and actually isn't hurting you. Is that fair to say? And then while you don't handle all aspects of it, what you can look at is kind of their overall financial makeup. And I think when I think of wealth advisor, I think of where you're trying to get to and do you have a plan in place to get there. So is there anything else you'd be mentioning in this conversation if people wanted to be thinking about that and looking at their whole situation as far as a move, or already here actually?
Yeah, no, definitely. So let me drop a couple of quickie freebies, right? To just say, look, if you are an American expat in the UK and your US investments include a money market fund instead of cash, you've probably got a problem. If you are still investing in municipal bonds in your US assets, you are not doing what you probably should be doing. If you have taken out a mortgage on a UK property in your own name and you want to upsize or downsize your home or whatever, and you pay off that in a single fell swoop, you could be generating a sizable US tax liability if the currencies have moved against you. So think about it and get some advice before you just go and do that. And I mentioned that any investment that you make that's into a structure of some kind that isn't sitting in the US, that owns other investments, so a CCAV or an OIC or any type of that's probably tax toxic from a US perspective. The other side is also true. If you're sitting in the UK and you still have US mutual funds back in your US assets, those are probably going to be taxed at double the rate they should be by the UK if you sell them while you're here. So these are just a couple of really specific things to say, hey, I might have that. If you do, you need to talk to someone to make sure you start to sort it out.
Yeah, and I think what I'm also hearing is don't assume just because, as you said, if you want to sell it, you're not having that conversation, right? Because you're, oh, okay, I want to liquidate out. I've had enough of the stock market or that investment. There's other things that definitely could negate everything you're trying to do in terms of that strategy or making that move. So I think that's really important. And I think one of the things I would love to do and in listening to you, how passionate you are in terms of sharing information, you have a much more detailed, I think, talk and workshop that we could definitely look to facilitate, where you do walk people in through some of these specifics that you've highlighted here. So I'd love it if we could, have you back on and perhaps we have a conversation and invite people to ask specific questions ahead of that. But in the meantime, I want to thank you for your time. If people do want to get in touch with you, we're going to have your contact details available on this episode as well. But if you've got a specific email you want to share or phone number and you want to share it here, please go ahead. How do people find you?
Yeah, no, I'm pretty easy to find. You can find me on LinkedIn, Gorge King the Fourth. If you put IV, you can find me immediately. And my Maseko email is just the name George.King at MasekoPW for private wealth.com. So happy to help or point people towards what they need if you reach out.
Thank you again. I know you and I first met by you giving a talk to some young girls in an auditorium. So again, I've seen for myself how willing you are to share that information and inspire others and have us thinking about wealth building from a very early age. So I definitely know you'd be the right person to talk to. So appreciate your time and we'll talk again soon.
Really happy to do this. And I think what you're doing for your community, sort of sharing information and helping them out, is fantastic. So happy to participate. Thanks for having me.
Thanks so much. We'll see you on the next episode. Bye for now.
Thanks so much for watching. Make sure to check out my other videos on my YouTube channel where I share great tips and information about the London property market and living in this fabulous city. So that's Arinzeh with Onyx Property Team and Keller Williams. Bye for now.